G'day and welcome to this week's video. This week we're going to have a look at buybacks, and in particular we're going to have a look at the live case study that's on right at the moment, and that's the Woolworths share buyback. Now, a lot of businesses do complete share buybacks off market, where people, current shareholders, need to tender their shares at a discount to the current share price, and obviously make it attractive for the company to buy it back. But in turn, for those investors that are in a nil tax environment, such as a superannuation pension, you get a substantial franking credit, which makes it very attractive for the shareholder that's selling out. So it's a real win-win for the company, the existing shareholders, and also the exiting shareholders. As usual, if you get some value out of our channel, please subscribe. That would be great. And those that have already subscribed, thank you very much for supporting us. So we'll dive in and just go through some of the mechanics. And as a general rule, it's a good sign of a strong balance sheet that they've got capital there that they can't reinvest back into the business. So it's an opportunity for them to buy back some of the shares, and if we have a reducing amount of shares on issue, that means hopefully a growing more profit is shared between less shareholders. So everyone's percentages that don't sell go up a little bit, so can be seen as an extremely positive thing. So just having a look at the facts for the Woolworths buyback. So they're looking to buy $1.7 billion worth of the off-market buyback. It represents just over 4% of the market cap or shares on issues. Now this is where it gets reasonably complex. There's a capital component, and I'll show you a breakdown in a moment, of $4.79, and the remaining amount of whatever the buyback amount is will be seen as a fully franked dividend. So that's where the tax advantage and the win-win kicks in. So investors, current shareholders that want to sell some of their shares via the buyback, they need to tender their shares at a discount between 10 and 14%. Now obviously doesn't sound like a natural thing to do, to sell your shares at a 14% discount, but it's this very large franking credit that makes it attractive for people that are in not paying any tax, such as superannuation funds. So let's have a look at what the numbers look like. Now we're going to use the figure of 3108 when I initially did this presentation for our clients when we were providing our recommendations. So using this as a guide, obviously that will change slightly as we lead up to the end of the offer and when it closes. And we're also assuming a 14% discount would be what we tender it back to them at, and it gives us a price of $26.73 buyback price. Now of that $26.73, $4.79 is the capital component, with nearly $22 representing a fully franked dividend. So based on that figure, that fully franked dividend is $9.40. So this is where it's very attractive for people in a nil tax environment, such as superannuation in pension mode, where there's no tax paid internally and no tax paid out to those that are 60 and above. Now, we'll mention that they're buying back $1.7 billion, which is a huge amount of money, but it only represents 4.1% of the shares on issue. So, more than likely, there'll be lots of superannuation pensions that are going to say this is a really good win. So, more than likely, people could offer tender all of their shares, but only some of them will be purchased back under the buyback offer. So please be aware of that. So here's the result. Current share price $31.08, but when we start to add in the franking credit of $9.40, the fully franked dividend plus the capital component under the buyback in a nil tax environment, $36.13 compared to the current share price, so $5 extra value. The one disclaimer that I've got, there's always a general advice disclaimer at the end of my videos, but I'd highly recommend that you head to your financial advisor, your accountant who's authorized to give advice in this area, and please get personal financial advice. Everyone's scenario is different, and this video does not take into account your personal financial situation. Thanks for listening. I hope it's a help, and I will see you next week, and catch you then. See ya.